If you bought Palantir stock anytime this year, you're down on your money. We will go through the financials of Palantir and show you why we've thought it's been overpriced the whole time. We'll use our software and give you an appropriate stock you should be paying for Palantir moving forward. And if you want to trade Palantir, Mo will show you all the charts and trends of this volatile company. We'll go over their earnings all in this video. But first, why should you watch this video? I bring your questions about Palantir, their earnings, and their financials to a couple guys who own and operate over $100 million in real estate, businesses, and stocks, and they'll show you the mindset about avoiding a company that's been hyped up for too long of time. I give you Paul Gabriel.
All right, thanks, Seth. So first off, guys, follow us on Instagram, Everything Money Investing. It's our new Instagram account. And follow us personally for our personal stuff. It's not really related to investing. So here's our Everything Money software, exclusive software. We're going to go to the 8 Pillars tool. We're going to type in Palantir. So guys, Palantir is controversial. So I did some research on Palantir. I was like, let me see what the bulls are saying. Seth, I was looking up article after article. Not a single bull was bringing in valuation, future revenue growth, and how it leads to stock price in the future. It was all based on look at how many contracts they're going to get.
Yeah, I hear when they, Mo, they're in the building phase. So when they do acquire new contracts moving forward, they're saying that like each client can be worth, over $70 million. There's a guy, I think his name is Popular Investor. He's quite down to earth, Paul, but he reviewed, he talked about Palantir. And actually, he's somewhat bullish, but also sort of down to earth on they have a long road ahead of them. But yes, I mean, there's not a lot of people like us saying.
So here are the pluses that these people gave.
Okay.
Institutional investors bought 8.3 of Palantir in the last 13F. Okay. So again, not something fundamentally based, just based on momentum and based on the market. Let's see. Q3 revenue growth this is from the company's proposed, what's it called, slideshow?
Yes, earnings.
Q3 revenue growth was 36% year over year to $392 million. And what's the market cap of the company? $40 billion, but that's awesome. They did $392 million in one quarter. Keep in mind though, Microsoft, we just did a video on, they grew quarterly revenue by 22%. So this massive company that did $176 billion did 22% revenue growth. Palantir is being revered for 36% revenue growth. And the revenue is less than 1% of Microsoft's.
So does that mean a smaller company should be...
A smaller company should be growing much more.
Okay.
They gained 34 net new customers.
Wow, great.
In the last... they closed 54 deals over 1 million in Q3. 33 of them were over 5 million and 18 were over 10 million. And they had free cash flow of 119 million.
Wow.
In the adjusted free cash flow in Q3 of 119 million. So $40 billion company. Can somebody tell me another company that might be $40 billion?
Well, if you compare this to anything, Paul, you're going to be wrong because
right.
Every other company is not like this company.
Yep, and every investment is a present value of future cash flow.
Paul, I stay up late at night when you say this, realizing like you're right. I have dollar bills to put into things, and I can make, as you say, the disciplined approach of making really great decisions on a minute-by-minute basis in my life.
And our decisions factor in growth. Growth is a huge aspect of growth is everything. Our stock analyzer tool, which you'll see later, guys, it analyzes the companies. The first line of it is, tell us your revenue growth. That's what matters most in a company. If you're going to grow a company 50% a year versus 10% a year, two companies exactly the same, but one has 50% growth potential, one has 10, I will absolutely pay way more money for this one. But what Palantir investors are doing is saying, I don't care about any of that. I see the stock price going up, which by the way, it's not going up, but I see the stock price going up. I will pay whatever it takes to get it. Look at the stock price here, guys. Let's look at the 5-year chart. It's exciting, 5 years, because it was last year in October, they went public and they went boop, and then they settled boop. Everybody's excited. Now look at this. I'm not saying this is right. I'm not saying that this means the stock is going to zero. All I'm telling you is, their growth has been huge in the last year, and look at the stock price. Yes, it's up over double, and that's what the perma bulls on Palantir will say. Oh yeah, well it didn't go sky high like this, like we said it would, but look, it's still over double it was when we bought it a year ago. Well, you probably didn't buy here, guys. Peter Lynch always says that he thinks he had one of the best funds of all time. Over 13 years, I think he made like 28% a year over 13 years. You know what he says? Over 50% of my investors lost money on my funds. Why? Because they invested at the wrong times. They only invested when things were looking good and not when things were looking bad. So to the benefit of somebody who likes Palantir, maybe now is a good time to buy it. But the problem is the most hype happens at these points. That's all I'm sitting there saying. So let's go look at the financials of Palantir. So it's a $40 billion company. Seth, can you do some Googling on what a $40 billion company would be?
Sure.
They did revenue in the last 12 months of $1.4 billion. They lost $500 million. They did have free cash flow in the last 12 months of $210 million. That's exciting. But look at their price to sales ratio, 28.5. This means the market cap divided by their sales is 28.5. The average software company is less than 10. Like Microsoft and those guys are less than 10, they're still overpriced. Or maybe they're a little over 10, but they're overpriced. They have a return on invested capital in the last 5 years of 0, because they haven't had any. And the last year was only 9%. So here's this amazing company. Look at the momentum even. It's below every single moving average from 25 to 300 days. Guys, I don't even have data to really look at. Why?
Young company.
It's a young company.
Now, young companies do build, and so they're in the building stage, client acquisition phase.
But look at their shares outstanding.
How bad is it?
900 million to 1.96 billion.
Paul, look at Kraft Heinz, Rockwell Automation.
So Kraft Heinz is 40 billion.
Mm-hmm.
So guys, for $40 billion, again, 1.4 in revenue and $500 million loss. Let's look at Kraft Heinz. We all know Kraft Heinz. $43 billion market cap, $26 billion in revenue, 2.3 in profit. They make more in profit per year than Palantir does in all of revenue. Now you might sit there and say, yeah, Paul, but Kraft Heinz isn't going to grow like Palantir. Absolutely. You're 100% correct. And Kraft Heinz also isn't going to dilute you like Palantir. Let's talk about the dilution. In the last year, Palantir has doubled its shares. Is that a mistake in the software? Or was that actually a stock split, or was it a doubling of shares? Can somebody verify that?
Yeah, hold on.
We might have to go. Okay, so when you have a company with 10 shares, with 100 shares outstanding, you own 10 of them. You own 10% of the business, right? So 100 shares outstanding, you own 10, you have 10% of the business. If they take that 100 shares and go to 150, you still own 10 shares, but now you own 6.66% of the business. You got diluted. So now you're splitting your revenue and profit amongst more owners. That's what they're doing to you. You don't notice it because you're the crackhead in the corner who just wants to get their fix. You just want your stock. You don't care. You don't look at how it's being distributed to anybody else. They're just feeding you crack because they know you're going to buy it all day long. And by the way, Palantir might be a great company. I love Peter Thiel, the guy who started Palantir. He's a phenomenal investor. But at the end of the day, it's an overpriced company. They're going to issue as many shares as possible because they'd rather issue shares that are overpriced than take on debt that they have to pay back at regular levels. Do you see it, Mo?
Mm-hmm. It's accurate.
It's accurate. So they have doubled their shares outstanding just by issuing more shares. Guys, I don't know what to say. There's nothing else to really look at here because to me, even with Palantir, all the positive news has nothing to do with valuation. And this is exactly what we saw in 2000 with tech stocks, in 2006 and 2007 with real estate. It doesn't matter. You have to buy in a growing market. Great. I know somebody who bought a house for $425,000 in 2006 in Miami, Florida. Go look at the population growth from Miami, Florida from 2006 to now. They are currently selling it for $375,000. They just sold it for $375,000 this year. 15 years later, sold it for less money. And guess what? It took this very hyped real estate market to sell it for $375,000. These things happen. Look at Intel, Cisco, Micron from 2000 and now. They haven't surpassed their 2000 highs because they were the Palantirs of back then. Paul, you don't get it. The future is insane. Okay, the future is insane. You could overpay for the future. And that's what they did. This is the exact example of go to your local high school and pay the top baseball prospect $30 million a year. Why? You don't know his future potential. It's insane. Let him hit the potential. Let him become Bryce Harper. Let him become Mike Trout. Let him become all these superstars first before you pay them the big money. But you're paying Palantir their huge valuation. They haven't even hit it yet.
Yeah, I think that's the gist of the show. So when they say when Paul doesn't get it, the idea is this is the same way that Warren Buffett, Charlie Munger, let's let these companies become something. Why not let Palantir get all the clients they're promising and hoping for? And when they do, and the stock price flips and goes cheap, that's when we're buyers. That's the definition of value investing, right?
Yep. Microsoft hit $50 a share in 2000, and in 2010, 11, and 12, I was called crazy for buying them in the high teens and low 20s. Paul, you don't get it. Microsoft's dead. So let me understand this correctly. In 2000, they weren't dead. Their stock price was 50. In 2012, with more revenue and more profit, they were dead, and you shouldn't buy the stock, and it was 15. It was high teens. Think about that for a second. The whole point is there was a mispricing in both areas. That's the point. People were overhyping the high and they were overhyping the low. That's the point. If you don't get this, turn off YouTube, unsubscribe from us. It's never going to make sense to you. But if you go, wait a second, that kind of makes sense, stick around. There's hope for you.
If you'd like to trade Palantir at a quicker pace, Mo, show us what's going on in the Bidnast Nation. What are people doing with Palantir?
So there's certainly ways to make money on this. There's two ways to make money on this, in my opinion. One is swing trading. This is a daily chart. This is a little bit more detail. You have your moving averages, you have your volume, and you have your daily stochastic, which moves up and down every single day. I would go in here and just take advantage of when you get a fall in price like that. There's definitely a way. Just notice that there's selling volume in there. You're getting engulfing candlesticks, and you have a downtrend. You can confidently get in there. Even here, this took a very long time. I mean, this took probably 10 days. You could have been in this thing for 10 days and rode that up and made gains on it. Here, this is a big fall that we've had in the last probably 10 days also, and you could have caught that whole thing very confidently, following rules that would have given you those results, not just throwing poop at a wall and hoping that it sticks. You can also come over here to a 15-minute chart. Because this is such a volatile stock, you can take advantage of this and get in it for just short periods of time. This is, what is this, 9:30 in the morning until 11:15 a.m. This was yesterday. You could have made all of this down. This is $21.60 a share down to $20.40 a share. It's $1 a share in about 2 hours. That's pretty damn good. This is the place to come if you want to learn these rules. There are ways to make money on these things if you don't want to get into them for long-term investments. Come and join me in the Bidnast Nation. You'll get my Trading 101 series, which is all the rules that I'm talking about right now, the Employed Trader series, the monthly seminars that I do, question and answer sessions. So if you don't understand this and you want to have a personal, not one-on-one, but a group session, you can ask me any questions that you have. And there's 900 other people in the Discord community that are all knowledgeable on this topic.
Thanks, Mo. So we can't really use our stock analyzer tool with this company due to lack of data, but Paul, tell them how to get the software behind you.
We were doing these on Excel, and our users wanted a way to look at their own companies and to be able to analyze their own deals without waiting for us to make videos on it. So we made the software. We invested hundreds of thousands. With the software, you get everything you saw here. You get it all on your iOS or Android device, either one. You get everything on there. You get the stock analyzer tool. You get all of these tools right here, plus all the ones that are coming. There's more adding. We're adding news. We have exclusive daily content, 2 or 3 videos a day from Seth, Mo, and I. You also get access to Seth, Mo, and I. You also get access to our community. There's over 6,000 people who currently subscribe to the software. They're in a group, in a big chat with lots of different rooms discussing tons of topics, including crypto and Tesla and other hype stocks you guys might love. There's trading. There's Mo with the trading. You get all of this for only 90 cents per day. 90 cents per day. If you're serious about your financial future, if you either save or increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, it could lead to hundreds of thousands, if not millions of dollars in extra gains in the long run, and it's only 90 cents per day. 2 ways to sign up, everythingmoney.com or Patreon. Either one gets access within minutes. The benefit of everythingmoney.com is you don't pay sales tax yet because they're not large enough, so sign up now, only 90 cents per day.
And that's our take on Palantir. We will keep you updated. At some point, we will be buyers if it gets into our wheelhouse. But we offer a contrarian view at the moment to obviously avoid an overpriced company like this. That's our take. Comment below. Final thumbs up. We'll see you in the community.